Good day everybody, it's Guy here, the unknown, and today I want us to look at something very important. I want us to look at the beautiful trades that actually happened today. And as I always say guys, if you don't know what you're looking for when you come to the charts, at what time you're simply guessing or you're gambling. You need to know exactly what you're looking for when you come to the markets. You need to know exactly where are you going to take the trade or what must happen for you to take the trade, okay? And then you understand it, master that, and then you rinse and repeat it. Trading is about trading the same thing each and every day. The same thing each and every day. Not to say you're gonna win always, but if out of 10 trades you're winning 7 or 6 trades or 8 trades, then you have a high win rate, and with proper risk management you're gonna be highly profitable, okay? That's what trading is, okay? Because obviously you're not going to win every trade and you're not going to chase every move that happens. You need to know exactly what you're looking for. So as you can see today, I took the S&P and I took it for 200, which was hit in roughly less than 10 minutes. Okay, so guys, with the strategy that I'm about to show you, we trade moves that are ready to explode. We only trade from the US session. We're only coming to the charts for a couple of minutes. Sometimes you trade less than an hour and you're good. Imagine less than an hour I took 200 pips. That's what I do each and every day, rinse and repeating. Okay, so without any further ado, as I said, if you don't know what you're looking for, you're gambling. So you need to know exactly what you're looking for. So we have a set of rules that helps us identify our trading opportunity or opportunities where we have an edge. Okay, so the first criteria is you identify trade volume before the session. Sometimes you won't be able to do this, but when you can, it's important because you don't want to be trapped yourself. Okay, and then the second criteria is you wait for the session to open. If there's news, you wait for the news, because most news are collected through surveys and you won't even know the numbers from those surveys. And then the third criteria is you wait for a chart pattern. 90% or 95% of my patterns are triangles. Okay, and the reason we wait for chart patterns is simply because we want to give insiders, the market makers, an opportunity to buy if they want to buy, or sell if they want to sell. Because for them to open a position, obviously they trade with big amounts, so we call them big money. They need us retail guys to take the opposite direction. So if they want to buy, they want us to sell. How do they do that? They show us an opportunity to do what? To sell. When we sell, they are buying. When they are done, they're gonna punish us, okay? Because they have the power to move markets. It takes roughly 10,000 lots to move the market 1 pip. So us as retail guys, we don't have that, right? So let's just say prices do something like this, okay? Prices do something like this. Okay, this is a chart pattern. This is a chart pattern. It's a triangle. Okay, so once this is met, we go to the next one. Guys, you cannot come to this one unless this one is met, and you can't come to this one unless this one is met, and you can't come to the trade, you can't execute unless 1 2 3 has been met. This you want, sometimes you won't be able to identify, so you can still proceed without. Okay, the only one with an exemption. These ones are a prerequisite for the one above. Okay, so once we have a chart pattern, horribly drawn by the way, okay, horribly drawn, okay, okay, let's say this is our pattern. Okay, I'm just gonna choose a different color. Okay, I'm gonna choose black. Fine, I'm gonna just choose black. Okay, let's just say this is our pattern. Okay, prices have been playing here, so we have a chart pattern. Once the chart pattern is met, we need to see an evidence candle. An evidence candle is a breakout candle, the big breakout candle, and it must be an engulfing candle. It must be the biggest candle from the last touch down here. Okay, sometimes yes, you'll have to make a judgment, because not every time they're going to give you the biggest candle here. They can give maybe a candle equal to this one before, but you have to make a judgment, because when they give an evidence candle, it must stand out. It must be a clear breakout. You don't have to doubt it. Okay, you need to know that now they are leaving, because I call this their footstep. They are gonna be dodgy when they are trapping, so we don't want to get in something we don't understand. Hence we wait for the breakout, but the breakout, we need a breakout of a big candle, hence we call it evidence. And here's where it gets more interesting. The evidence candle must happen at the correct time. The correct time is simply, we need a trade as close as possible to the o'clock mark. This is just the watch, okay, the clock, and this is half past. Okay, so we need a trade as close as possible to these marks here. How do we do that? We only take a trade if it's, oh sorry guys, sorry, we only take the trade okay, we only take the trade if the evidence candle happens at 50, okay, all the way to 10 past, 50 to 10 past. That simply means it's 10 minutes before or 10 minutes after the o'clock mark, or else it's gonna be 20 to 40. Okay, we take the trade if it's between 20 to 40. What do I mean? We take an evidence candle, we trade the evidence candle. Okay, we execute on the close of the evidence candle. So we need this evidence candle to be within these times over here, as close as possible to the half past, or as close as possible to o'clock. And I really love them when this happens between 55 or between 05. Okay, or else I love them more when they happen between 25, or when they happen simply 35, because now this tells you they are happening 5 minutes before to 5 minutes after, 5 minutes before to 5 minutes after. This is as close as possible to to the o'clock or to the half hour mark. So we are only taking trades with that happens within these times. That is to say, the evidence candle must happen within these times. And once all this is met, we take the trade. Minimum stops 15, maximum 25. It's always good to have 25 pip stop, because it's not about having tight stops, it's about having stops that are protected. Okay, so now what we're gonna do is yes, the chart pattern is important. Okay, it's not only triangles. I'm just saying 90% of my patterns are based on triangles. I put a lot of patterns on the playbook, okay, because even the head and shoulders, it comes in a variation. Okay, I've put a lot of patterns on this playbook, which is on the description below. Okay, you're not always gonna get this kind of head and shoulders. They come in a variety, and there's a lot of patterns you need. So I've put everything here. I've just actually summarized the entire strategy for those who need a PDF format. I've put everything here that you'll need to know. You just have to master this. Okay, but again, you can watch the videos. Okay, you can watch the videos, it's important. I also put like different kind of trends, because sometimes it's very bad to actually counter trade an explosive trend. Okay, so everything is here, but I have that on my videos. Okay, there are many videos where I shared about trends. Okay, so now what are we gonna be using? Sorry guys, I want us this is what I was using. Okay, so I want us to come to this. We're gonna be using this. Okay, this is what I was using today. Okay, it's okay. Okay, it's okay. It's okay. We're gonna be using this to judge the trade. So we're gonna go to the charts. Okay, quite quick. I just want this to be very short. The first criteria, if you remember, is to identify trade volume before the session. Let's start with S&P, because it's the first one. Okay, let's see. When we say trap traders, is we are coming to the session 10 to 5 minutes before the session opens, and we need to know who is losing. Okay, in this case, there's then people up and there's then people down. The session is opening in the middle. So whenever the session is opening in the middle, obviously we don't know if this guys down here are trapped or this down guys here are trapped. Who is losing? We don't know which guys are trapped. Okay, because we are now in the middle. Okay, that's why I said sometimes you won't be able to identify that. So now let's come to the Dow. When we come to the Dow, you can see there's some people up. The session is opening down here. So obviously everybody went up above the closing price of yesterday. I always say when they trap, they're gonna trap above or below the closing price, which is this red dotted line. Okay, it's just where price is closed, and it's an indicator which is free in my description. So they send people up, and prices open down here. So these guys who went up are at a negative now as the session is opening. So these guys are the ones who are trapped. Okay, because they are losing. In this case here, when we look at the Nasdaq, who is trapped, obviously everybody below the closing price. So when they are trapping, they will just trap above or below the closing price. Let's just pull this a little bit so that we can see. Okay, why? Because prices are opening up here. Who is losing? Everybody who went down is losing. Okay, just want to mention this quite quick. Okay, so everybody went down is losing. Okay, fine. Now we have identified that. We know who is trapped. Why do we identify this? If they are giving you an opportunity into trap volume, you need to know that most of the time they are not going to release the guys who are trapped. Although sometimes they can release them and do something they did today, which is to trend. But most likely they use the entire day to trap this guy. So what they will do mostly is they won't release these guys. Okay, or sometimes they can just stop hunt. You just need to know that there are 3 scenarios, and one of the 3 is gonna play out. So you have to be prepared for all of for all these scenarios, and take what actually works in your advantage. Okay, so okay, let's go back. Yes, we have identified trap volume on the on the Dow. We were unable to do that. Okay, Now we wait for the session. Not rocket science, you just look at your watch. Now we are coming to a chart pattern. Okay, chart pattern. So we want to see a chart pattern, right? We want to see a chart pattern. Okay, good. Now if we start with S&P, okay, now if we start with S&P, okay, I'm gonna just erase this because it might actually put us make things hard for us. Okay, so now let's try to identify a chart pattern from the S&P. Okay, I just have to zoom out a little bit so that we can see if we have a pattern. Actually, let me start with the Dow. Okay, the Dow just went down, 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 and the session opened. Okay, we want to see a chart pattern. What really happened? Okay, they did this and prices just started collapsing. Okay, we don't have a chart pattern, right? This is important. We don't have a chart pattern. Okay, so I'm just gonna bring this sorry guys, I'm just gonna bring the S&P at least down so that we can see if we have a chart pattern. Okay, and mind you, the S&P is the one that I took today. Okay, so let's see, how do you identify a pattern? You just need a point with multiple touches. Okay, multiple touches. Okay, so for me, this is what I got today. This is what I got today. This was what I got actually. Yes. Okay, it pinned through to here. Okay, and I took the bodies. Okay, I just want where there's multiple touches. Touch, touch, touch here. Okay, so there's a touch on the body, there's a touch on the body, there's a touch on multiple bodies. This is an inverted triangle. As you can see, it's inverted triangle. It's not a channel, it's a triangle, but it is what? It is inverted. Okay, this is an inverted triangle. Yes, so we have a pattern on the S&P. Let's go to the Nasdaq. Okay, okay, I will just try to work with this. So with this one, you take points which have multiple touches, right? Yes, you take points with multiple touches. I'm almost done, guys. I just want to be quick on this one. Okay, and then when you have done that, you do this again. You see, we have a triangle, but this one it's inverted. Okay, because the other end is on the side, it's inverted. So we have an inverted triangle inside trap volume. This is highly important. Inverted inside trap volume. Okay, so let's try to zoom this a little bit so that we can see. So if we come to our checkbox here, we can say, okay, do we have a chart pattern? Yes. So we are coming to our checkbox. We have inverted on both sides. Inverted triangle. We have an inverted triangle where on both sides. Okay, we have inverted triangle on both sides. Okay, is the pattern perfect? For a pattern to be perfect for me, it must at least have 3 touches down, 3 touches up. Okay, just as I've written here, it has to be have 3 touches up and 3 touches down minimum. Okay, so I'm gonna erase here so that we start afresh. If you need this tick box, just send me an email here, I'll send you the tick box. Okay, so guys, okay, is the pattern perfect? We need to go back to the charts to see that. Do we have 3 touches? Let's see. I'm just gonna use something here. We have 1 touch down, you can see. We have another touch up, and then from there they go all the way down. Okay, they go all the way down, and this is almost a touch. You know how I do the touches, because this is just supposed to be an area, but it at least it took all the way, it went beyond half the okay, because I use like, okay, I'll put a line in the midway, so this went all the way above the midway. Okay, so we have another touch down. How much touches do we have? We have already 3 touches down and we have 2 touches up. Okay, so from here it comes up. Okay, sometimes guys, you'll just have to make sound judgment, and one thing I love about this is because it's the fact that it's my A+ setup. Okay, why? What is my A+ setup? It's a setup I'm willing to take a bigger lot size on. Why? Because this pattern is actually building on a level. As you can see, this is yesterday's closing price. Okay, it's an indicator called previous day closing price. It's an important key level. Okay, and then when we come to Nasdaq, okay, let's see, where is the closing price? Okay, we should notice that we are inside trap volume, but I'll just take this out. I won't take it away actually. I just want to keep it so that we can all see it. Okay, because if I keep it, it's just gonna confuse. However, I'm gonna pull it down a little bit so that we can see the closing price, because it's important. This pattern is also building on the pattern is being built on a crucial level. You see, we have the high, we have the closing price, we have the low of yesterday. Three important key levels, right? So this one is building on a pattern. Again, I will call this my A plus setup. Okay, this is my A plus setup. Let's see, this is my A plus setup again. Why? Because it's building on a level. Okay, this is an important key level. Okay, it's building on top of what? The closing price of yesterday, this red dotted line. The indicator is free in my description. Okay, so okay, let's see if the pattern is perfect. Do we have touches? Obviously, almost a touch, one. Okay, we have a touch down, so this one comes down again from up, so yes, and then it goes. Okay, yes, this is almost a touch, this is a touch. You see, now we have 2 3 down, so let's see, we have the third one up, so it has met our criteria of being a perfect pattern. Okay, this just sent people into the opposite direction. The pattern sometimes is not going to be perfect in terms of touches, but if it comes as close to the line, we count it as a touch, because it's supposed to be an area, not just a line. Okay, this is where you must perfect your ability to make judgments on the patterns. Okay, so literally, yes, this one has 3 touches up and it has 3 touches down. Okay, perfect. So these are the patterns perfect. That's something we have to discuss. Yes, they are, both sides. Okay, NAS and S&P. How long does it take? It's important, because if the pattern takes over 1 hour, we can target 100 pips. However, market conditions will tell us exactly how much we can target, because sometimes we can target 200, sometimes 500, sometimes 400. That will depend on market conditions, but as long as it's beyond 1 hour, we know that we can target 100. So again, I'm just gonna zoom in. This is not rocket science. I'm just gonna bring this tool here, I'm gonna pull it through. It's 226 candles. This is above 1 hour by far. It's above 2 hours. Okay, it's about 3 hours. Yes, so if we take this one again and bring it just before the breakout, you can see this is 336, so this is 226, this is 336. Okay, so what we can conclude is that it took above 1 hour. Okay, 1 hour, which is the minimum one is 226 minutes. Okay, which simply means we can target 100 pips. It's safe. Now we are coming to the most important parts. Okay, the last 2 parts. Do we have an evidence candle? An evidence candle is what? Is the big candle that breaks out of the pattern. Okay, so now we need to know if we have an evidence candle. How are we gonna know? We literally go back to the charts. It's the big candle that breaks out. We're gonna start with the Dow. You saw that with S&P, you saw that on Dow we didn't have a pattern, right? So okay, in our case, this is gonna be the last touch. Okay, because usually we take the last touch up, but if it comes and touches, you see, this is where they touched down and they made a last touch. This is the last touch after the touchdown, right? So we need a big candle that breaks out of here. Okay, I want to show you something important. Do you have an evidence candle? No, this is just a breakout candle. Again, this is just a small candle. Again, this is just a small candle. So we don't have an evidence candle, and I love this because we didn't have an evidence candle. Okay, so we don't have an evidence candle in this case. Okay, so we're just gonna write it here. No, and I haven't spoken about what just happened here. I want us to look at it. Let's go to the Nasdaq to see if we have an evidence candle. Nasdaq. Okay, yes, they touch, so we're gonna look from here all the way to here. Do we have a big breakout candle that is convincing to be yes, this is a big candle as compared to the candles from the last touch. Okay, this is a big candle, so we can say yes, we have an evidence candle, right? Perfect. We have an evidence candle on what? On Nasdaq. Okay, we have an evidence candle on Nasdaq, but we don't have an evidence candle on S&P, and I took S&P. Okay, this is a little bit interesting though. Okay, that's why I want to show you this. It's a little bit interesting. Okay, we have an evidence candle, so on one it's a no, and on the other one it's a yes. Okay, we have it on what? We have it on Nasdaq. Okay, yes, we have it on Nasdaq. So Nasdaq has met all our criteria, but S&P hasn't. So what do? We keep on waiting for the S&P. For the Nasdaq, we can take it. Let's go to the next criteria, which will decide if we are taking it or not. This is the final decider. It's the most important one, the time. it will tell us if we are taking the trade or not. Okay, so we're gonna go to the charts. Okay, this one didn't have an evidence candle, but this one did. So let's look at the time of the evidence candle. It's 1412. Okay, let's come back. 1412. Okay, let's consult. 1412, it's unfortunately outside of our timings. Do we take it? No. So this one has failed. Okay, Nasdaq has failed. Evidence candle is 12. Okay, so this is a failure because you know our times. We don't take Nasdaq. So let's go back and revisit the S&P. Okay, what does the S&P do? The S&P has broken out. Okay, it retest. Now things have changed. Why? Because we have a retest, and the reason we didn't have an evidence candle here is because maybe they wanted to give a retest, right? Because if they don't give a big candle that breaks out, they're simply telling you that they want to still play around. Okay, but if you doubted this candle, it's okay, but for me it's just a big candle at the wrong time. Okay, at the wrong time. Okay, fine. So what do we do? If there is a retest, it changes everything. Okay, a retest is important and it changes everything. So let's look at what happened. They retested the line, they came back with now something called an evidence candle. You see this now. Now this is the big candle from this last leg here. You see, it's the big candle. They engulfed 1 2 3. They engulfed almost 3 candles. Okay, they engulfed almost 3 candles. You can see this is an engulfing candle. It's the big candle that just went down after the retest. So this is the candle I actually took, but one thing I did, I waited for this candle to close, and immediately the next candle started by pulling back. So I just waited and waited for a time when they surpass the body of this one again. Okay, the body of the second one, and the moment this one opened, that's where I executed. Hence why you will see here, you see, I executed. I waited for this one, then waited for this one, and the moment they surpassed this candle over here, which is the evidence candle, okay, I executed. So I took some time. It just happened, guys. I was actually supposed to execute on the close of this one, but it just happened that I the trade like I delayed a little bit. Okay, I just delayed a little bit, not planned though. I just delayed a little bit. Okay, and yes, this one started by going up, and when it started by going up, I just wait for it to come down and surpass, and it didn't, but the next one also didn't. So the moment this one opened down, that's when I executed. Okay, and I targeted 200 pip. This, you know, S&P is more volatile than the Nasdaq. So if I'm targeting 100 on the Nasdaq because of the pattern, I'm obviously gonna target 200 on S&P because it's more volatile, right? So when you look at it carefully, you will realize that I took this one only because it retested, then gave the candle we needed, the big candle. This is a big candle. You can see how it engulfs. However, this one was full of doubts. Okay, let's see what time was this. Okay, what time was this? Okay, we go to the charts to see the time. Okay, this is important now. Where was it? This was the first candle. Okay, it happened exactly at 20 past, but my trade came at least at 23 past. If we go to the timings, does this align with my timings? It happens roughly at 22 past. Okay, 20 past actually. Yes, this is the perfect time for me to take the trade. Okay, because this falls within my timings. So Nasdaq was outside. I let it go. S&P was within my time. So all the criteria were met, but sometimes when they pull back, the time no longer really applies. Okay, but it's just important to look at the time after a retest. But a retest changes everything. But this one was given at 20 past. This is a big candle that was given at 20 past. Okay, so I took it here. It's just that I didn't wait that much long. Had I waited, I would have entered somewhere again here. Why? Because now they surpassed this low. I would have entered here and trailed my stops, because my stops were just 25 pips, just on the line. Okay, yes, you see 25 pips. So my stops were just on the line. They were on 25 pips. So had I waited a lot, just a couple of minutes, 1 2 3 4 5 minutes, I would have entered another position here, and I would have traded my first stops to 25 from this candle here, because obviously this is already, I'm already in a position, so you don't have to wait for this candle to close. You just wait for it to surpass, because already everything has already been met. So now you can't say, hey, I want to wait for the candle to close. Everything has already been met. So I was gonna take roughly 25, yes, but I didn't wait that much. Hence, you see, I took it from here and it went 200 pips in just a couple of minutes, guys. In just a couple of minutes, I executed on this one, and 200 pips was hit in actually 13 minutes. How beautiful is 200 pips in 13 minutes? So guys, I told you, I want trades that are exploding. This, unfortunately, I would have taken it, but the timing was not perfect for me. The timing was not perfect. It was 12 past. So sometimes you'll miss trades, but it's always better to miss than to make a mistake of always taking out of time and most of them coming back to retest. You see, this one broke out obviously before time, but it retested on the right time. So even this one could have retested, okay, but they just decided to go sideways and then break down. Okay, so yeah, okay, maybe someone could have taken this engulfing candle because it happened just 2 minutes before the half past mark. So if you missed this one, you could have taken this one, because now this is the big candle happening at the right time. Okay, big candle happening at the right time. Okay, but the move was already too far. So this is why, guys, I ended up taking S&P today. I don't know what I'm gonna take tomorrow. So for me, I'm governed by price action. I don't have a mindset to say this is gonna happen. No, I'm gonna look at prices and they're gonna tell me, but I'm gonna base almost everything on the strategy here, the evidence candle. So you can see there was no evidence candle on S&P, but there was something called a retest, and this is something I've never spoken about, but as things happen, I'm able to talk about them, because sometimes when I'm recording, maybe they haven't happened, it's hard to explain. Okay, but this one was so good because they retested, which now changes this. Okay, and the timing was so perfect, so that's why I actually chose S&P. So guys, if you are new, hit the subscription button so that you don't miss more. You see, beautiful trade, although it went 500, but I just want my take profit to be hit on the first move down. And by the way, we are always willing to take trades that are ready to explode instantly. Guys, I truly appreciate you. Have a beautiful night. Thank you.